Bitcoin is gearing up for its next major move. It's kind of in a pressure cooker right now. It's been hanging out around $40,000, leaving a lot of people to wonder what's going to happen next with this major move. Today, we have a special guest. Gareth Soloway is on our show. He's a professional Bitcoin trader. He's done incredibly well in the market, and he's going to be giving us his insights into the charts as to not only what's going to happen with this next major move, but also price targets that he's looking for in the short and near term, and if he's buying Bitcoin now, or is he sitting on the sidelines waiting for something to happen? Gareth, welcome into the show.
Oh, thank you so much for having me, Steve. It's really a pleasure to be here.
No, it's our pleasure. I think we're excited to see what you have to share with us. I know your team reached out to my team. We've seen you on the Kitco News with David. I think you guys have a shout out to David. You guys have a phenomenal relationship. I think you guys should have your own show, but we're curious to see what you've got for us in store. Can you walk us through kind of as a swing trader, what's kind of your mindset right now with Bitcoin as we stand today? Are you buying? Are you selling? What are you looking for in the short term?
That's a great question. And I think number one, we want to make sure we isolate down the different time frames. So you have someone who's an investor who probably looks out for the next few years, maybe even further than that. In an investor's mindset, when you talk about 5-10 years down the line, I think Bitcoin is way higher than it currently is. However, I do view it as needing to go through a cycle known as kind of like the .com bust, right? So you have so many cryptocurrencies out there. There's 18,000+ at this point, more every single day. And it's just too many. It's too much junk in the system. Just like in the late 90s, you had all these .coms, which really didn't do anything, but they got crazy valuations because they had that attachment of .com to them, and investors just paid any price for them. So in terms of the shorter term, now let's talk about swing trading. Swing trading for me can be a hold of a couple days to a few weeks. What I've noticed on Bitcoin is that we are trading within a range here. There's this top line here where you can see perfectly matches these highs. And then you have this bottom white line where you hit it here and hit it here, right? And this line is perfectly parallel. The two white lines are exactly parallel. And so what you've been doing is you've been staying in this range in the near term. Now you have this one yellow line which kind of connects these lows, and I've been trading that line actively as well as this upper line. So when we were up here, I was going short on Bitcoin. A lot of people out there were talking about, oh my goodness, Bitcoin's going to break out. The charts, I literally shut my brain off of emotion. When people are going nuts and are hyping it, I say, well, what does the chart tell me? Because that's the truth. All right, there's lots of motives. We all want to make a lot of money, but really it's all about the chart. So up here, it was a short. When we came right into this low pivot here, I did buy, and I'm currently still long because we are still holding this line. Short-term target is between 42 and 43,000. So that's a very short-term trade. I may be out of that over the next couple of days if we achieve 42 to 43,000. Now, Steve, one of the things I do want to point out, now you might hear me saying, oh, I'm long, but at the same time, that's a very short-term trade. I do want to send a warning sign in the near term or over the next few months, because this bigger pattern is what's known in technical analysis as a bear flag. So you have this big drop from 69,000 down to 33,000, and then basically this choppy sideways consolidation is known in the technical analysis world as bearish consolidation. And the key to remember here is that if you looked at 1,000 of these charts, you would see a majority, and probably in the 70 to 80% range, a majority of them break to the downside. All right. So again, we're just looking, technical analysis is basically probabilities, right? So it's never going to be 100%. And I always hear people saying, oh, well, this was wrong this once or this. And of course you're going to have that, but it's a way for you to become the casino house versus the gambler, right? So if you go into a casino, and Steve, I don't know if you gamble ever, but you go in, maybe once in a while you walk away with more money than you went in with. But in general, if 1,000 people go into that casino, the casino's making money. And that's what you want to be as a trader. You want to be the person that generally always is making money 8 out of 10 times, 7 out of 10 times. So at least in terms of the overall midterm view, you have to think Bitcoin has further downside here, even with my short-term quick trade to the long side.
So A number of things. Number one, it's very interesting. You pointed out the bear flag. We just made a video early this morning about this exact bear flag.
Oh,
And yeah, I think a lot of people get excited that we're in a channel that's rising. And they're like, hey,
yeah.
Steve, we're making higher highs. We're making higher lows. This is really good. Everyone said we're bullish. We're going back to a new all-time high. What would you say to the folks that are emotionally attached to that outcome of Bitcoin making a new all-time high? What would be your recommendation to them?
Yeah, so I know you've traded since you were very, very young, Steve. So you've kind of been through this, and what I learned early in my career was that when you get emotionally attached, you generally get swung by emotion, and emotion, when it swings you, can make you do the wrong thing at the wrong time. And so early on, I always would fall victim to this. I would be in love with a stock, and people today are in love with Tesla, Bitcoin. There's all these kind of grouped stocks and cryptos that people are just in love with. So I think the best thing to understand is remember that it's a vehicle, and that's it. It's an entity for you to make money for you and your family. And if you remember that, then you think much clearer about it. You don't want to fall in love with anything. And I always say this kind of revolves more around Tesla because of Elon Musk, but people are just so into him, and he's a genius. But at the same time, when people are ready to give their firstborn to Tesla to invest in it, remember that when the board of directors is sitting around the table with Elon Musk, they're not saying, that John Smith, we're going to make sure we do everything right for him because he really believes in us. They're going to do what's right for the company and what's right for them. So in turn, you need to do what's right for you and your company, which is your family. And I think that's a very, very important thing to remember. One thing, if I could just take a second to discuss this, is that you're 100% right how you have this upsloping kind of channel. And a lot of people are like, oh, look, you're making higher lows, right? And higher highs. All right, but let me show you this. This is going to be so, kind of a blow your mind moment for a lot of people out there. If you go back to the previous, and I'm going to put my parallel channel. So remember over here when last May and June, we were kind of trending lower, and then we had this big breakup. Well, take a look at this. If we draw a line here and we draw it down here, you basically have a channel that was downsloping. And in this situation, it's the opposite, right? So this one was downsloping and it broke to the upside. This one's upsloping, and in general, these break to the downside. So it's almost like it teases the small investor's mind where they think, oh, higher lows, higher highs, this is bullish. And then the chart is like, nope, not so fast. We're going to take your money. Over here, people kept on seeing lower lows and lower highs, and they got very bearish. So what does the market do? It goes the opposite way in the scheme of things here. So just keep that in mind, is that sometimes it's counterintuitive like that, where the charts will do the opposite of what you think.
So to a lot of folks that are relatively new to trading, maybe they've been trading 2-3 years, they're still getting their feet wet, they're still making a lot of mistakes, they're learning from their mistakes. What would you suggest to people at that experience level? Would you suggest to trade within this rising channel that we're in and try to get a little greedy? Or would you suggest they sit on their hands? Or would you suggest they sell everything now and wait for it to go lower? What would be your suggestion to these folks that are still figuring out how to be a trader?
Yeah, so the number one thing I would start out with is get educated, right? So one of the things that I found, and I literally am proof positive of this, is that if you try to learn via trading, it's going to cost you a lot more money than if you learn by taking some courses and learning by reading books. And yeah, you're the same way. I know you and I have a lot in common in that respect. So like I probably paid a couple $100,000 when I had very little money in my early career over the course of years as I learned my lessons the hard way, versus if you get educated, you can get some great courses out there for under 10,000 and really learn a lot. So that's number one. Number two is you have to say to yourself, if I'm going to trade the ranges, do I know enough? Am I not going to get swayed by emotion? If you're going to get swayed by emotion, just stay away. In this pattern is bearish, which ultimately should yield further downside. So I would say you stay with what you have now. Some people ask me and they say, well, I'm still holding up some Bitcoin. Should I just sell it at this point and then look to get in at 20,000 or 25 or 30,000? And what I would say is you don't necessarily need to sell at this point because we're already so significantly off the high, but make a game plan and say to yourself, okay, every 5,000 down on Bitcoin, I'm going to dollar cost average and build, right? And this way you're not all going in here or adding to your position at these higher levels. But if you add as you fall, you'll bring your overall average down. And I never want someone to, like, if they really believe in it, I don't want them to sell, because if I say it's going to 20, let's say, and it goes to 21 and then it rips to 100, I'm going to take the blame on that and they're going to be upset. So hold what you believe in, but then look to dollar cost average. Dollar cost averaging has been one of the best things I've ever started to do in my career. It has helped me get better averages, and I would recommend doing that.
So another question would be, let's say somebody's got a little bit more experience. Let's say they've got 5-7 years, they've kind of started to figure it out. They're starting to win a little bit of trades. Where I think a lot of people make some mistake is, you talk a lot about swing trading, right? And some people may hear that and they may think that you're trading with your entire position. Are you trading with all of your Bitcoin? For example, you said when it comes down to this yellow line around 40K, you probably entered a position. Are you going to exit that position and win? And then what percentage of your portfolio are you trading with?
It's such a good question. It's so important. So this is really important, and it's going to probably surprise a lot of people. So what I do is I do a risk analysis, and I say to myself, okay, what's the macro pattern? Macro means big. So the big pattern is bearish, right? So in general, it's a matter of time before we go lower. So you don't want to say, okay, well, right at this level, I'm going to put 100% of my portfolio in Bitcoin, hoping for a $2,000 bounce when it could drop $5,000 or $10,000 on me. So literally what I did, and this is in my service, is we bought 4% of our portfolio in Bitcoin right here. We're about up $1,500 per coin at this point, and that's all I did. There's no reason why you have to try to make $1 million off $20,000 overnight. It's slow and steady wins the race. I mean, I think that's one of the biggest issues that newer investors have, is that they're so focused on becoming really wealthy so fast that they make mistakes and then they end up paying the price for it. And I always say the best example of this to do is take a calculator and punch in $20,000 and then compound 20% per year of that money. So 20%, then 20%. And what you'll notice is in like 10 years, you have like over $500,000 off of that 20,000. Now take it from the other perspective of being a cowboy and say, okay, $20,000, I'm going to make 100% this year, but then I'm going to lose 50% the next year, because being a cowboy, you're going to have your big losses. And what you'll notice is after 10 years, that's still $20,000. And so again, slow and steady wins the race. Run the marathon, not the sprint. It's very important to kind of properly allocate based on risk. And again, for me, that's exactly what I did here. I said, you know what, maybe we can make $1,000, maybe a couple thousand over the course of a week. That's not bad money. I'll take it. I'm not going to risk a lot, but at least I'm not putting myself in harm's way.
Thank you, Gareth. I think 4% is the key there. And a lot of people that they probably had to rewind the video to listen to that again. I think that's a big misconception as we get into this crypto space. Everybody's just excited to be rich overnight and to hit the home run and Hail Mary, home run, Hail Mary. And it's actually, small and steady wins the race. Success is a series of small wins. And we obviously teach that in our courses. And I know what I really respect about you, Gareth, is that you started your company 15 years ago, and it's done incredibly well. Big props to you. Big props to all the entrepreneurs out there. And then Gareth just recently, last December, started verifiedinvestingcrypto.com. So you guys can go to check that out as well. We don't give a lot of shout outs, Gareth, on our channel, but I respect that you talk about the facts and the charts, that you're actually trying to help people with emotion to make sound decisions. So we appreciate you. Can you walk us?
Thank you so much.
Can you walk us through? So in your mind, you entered this position, you entered with 4%. of your portfolio size, what are you looking for when to exit this trade, and what's your strategy going to be if we break this channel?
Yeah, good question, right? So if we zoom in a little bit and let's talk about that, is that basically this is your next big trend line right down here. So when you're looking in terms of risk reward, you have to say to yourself, okay, well, if this trend line breaks and we break down, how much can I lose? And the answer is about, this is right around 30, just under 37,000, or right around 37. So from my entry, which is just underneath 40,000, it would have been about a $3,000 per coin loss. So that was number one, is kind of figuring that out. And then the next thing I did was I decided to myself, I said, okay, I only have 4%. So it basically gives me maneuverability. And I think one of the best things as a trader you need to realize, and this is as investors, is that you have to think when you're entering a trade, if something that I don't think is going to happen happens, how do I react? How am I going to trade that around that? So for me, what I told our members is that if it breaks below and it looks like it's gaining momentum, we're going to take a small stop out, somewhere in this vicinity. But the other option, because we only have 4%, and this is the beauty of it, if I had 100% of my portfolio here, I couldn't do this. But the other option is just adding another 4% right here and then looking for that bounce. And that's what I talked to them about. And I said, all right, so listen, I'm going to decide this based on the charts that I'm reading, is whether or not we're just going to cut it and then re-enter here, or do we just hold it and then dollar cost average right here, putting our average right in this middle area? And again, for me, I didn't have to make that decision, mainly because we never confirmed a break of this trend line. But that was something that I was contemplating doing. And the beauty of again, a small position is that you can buy at the next support, then your average is here. And when you get a big bounce, which you should get, considering we have only 1-2 hits here, you could actually get a bounce all the way back to this yellow trend line and then end up making money, even if you had to dollar cost average. And again, that's so important. But I do want to just point out that if, let's say, we did buy it down there and dollar cost average, if it did get into this lower range, that's where you have to cut the trade. At that point, you can't risk it because there's nothing below this area. Once you break out of this channel here, you're in dead man's zone, and you could fall $5,000, $6,000, $7,000, $8,000, $9,000 very, very quickly.
That's a great point. So one thing that I think would help a lot of folks is you mentioned the 4%, which I think is so critical. I hope people really hear that. Let's give a hypothetical. Let's say hypothetically, right now, we weren't in a bear flag, we were in a bull flag. And then we just had a breakout candle and then a confirmation candle. Are you still trading with 4%, or are you going to go all the way up to 100%? How do you make that determination of what percentage of your portfolio side do you trade with? Is it confidence of that pattern? What exactly? Walk us through that thought process.
Yeah, so that's a good question. So let's say we do, I'm just going to draw on the chart so we can do some annotation here. But so let's say you have a move up in Bitcoin or any asset, and then you start to make that bull flag, which can be, now just a little tidbit, and I'm sure you teach this kind of stuff, but it's awesome, is that technically a bull flag is a right angle, right? So there's a 90-degree angle here, but in reality, in charts, it's very rare that you get a perfect right angle. So what I always like to tell investors is that anything up to 45 degrees inside of this area here, that is valid in terms of a bullish consolidation pattern. Anything below, I'd be very careful on, because it's usually a reversal signal. But let's just say we get this type of consolidation. What you're going to look for is a break of this upper line. And once you get above on that bull flag, that's where you would start to buy and accumulate them more. Now, just to be clear, I'm not one to go from 4% to 100%. I always think on the defensive side. And I think that's a big brain change from like a beginning. When I was a beginning trader, probably you too, when we went in, we always assumed we were going to win. So we always, well, why wouldn't you put your full account in a trade if you think you're going to win, right? If you're like, oh, I'm going to win, well, sure, let's make as much. In reality, when you get burned enough, like I've been burned in my early career, you start to say, listen, a breakout can look great and it still can fail.
Right.
So instead, if I had 4% in this bull flag and it broke out, I could see myself going to 10%, but probably that's it. And that's okay, because as you kind of accumulate wealth, you're protection of your downside is the most important thing. All right. How much you make, over the life of your career, it's going to compound, it's going to grow. If you have a major loss that wipes out 50% of your portfolio, coming back from that is insanely hard. So again, yes, you with a bullish pattern, you can up it, but I don't recommend going all in ever, to be honest.
Great advice. Great advice. And people in crypto, we need to hear that from folks that have experience. You know, for me, it was ego. Ego got in the way year after year after year. My mind just kept telling me, I'm going to do this. The next trade is going to win. I'm going to trade with more money on my next trade to try to make up what I just lost. And it was ego, 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 until I finally woke up and I was like, I need some education. I don't know what I'm doing. So that was the wake up moment for me. It sounds like we have some sort of a similar story where it was just I kept getting kicked in the shorts and until I woke up. So what are you looking at in terms of a downside target? So a lot of folks get confused in crypto when we talk about, on our channel, we talk about a bigger move is coming. Folks interpret that as 4 hours from now or tomorrow. And I believe you and I are on the same page where it's like, hey, this is the next couple months. Here's what it's going to look like. So in the next few months, walk us through what you're looking at in terms of a price target.
Okay, so, and again, I don't want to shock anyone. And number one, before I talk about this, I want to be clear that just because I'm saying it doesn't guarantee it's going to happen, right? So I'm basically putting out there some thoughts that I've put together with some chart analysis, and I want people to kind of take it with a grain of salt, but understand it is a possibility. All right, so one of the things that bothers me about the crypto chart is that this pattern is identical to Amazon's, and we all know Amazon. I'm sure we use Amazon. It's the same chart pattern that Amazon had in the 2000 period before the dot-com collapse. And the similarities with the dot-coms, as I mentioned earlier, there's crazy similarities. Number one, the crypto blockchain, people talk about it, it's going to change the world. They use that terminology all the time. It's a revolutionary thing, right? And I agree with that. But they also said that about the dot-coms. And by the way, they were right about dot-com as well, about the internet. But the problem is that you still need these washout periods. And when you have meme coins and these joke coins and they get billion-dollar valuations, that's not healthy. So if you look at this M pattern, what I want to do now is quickly go back and show you guys what Amazon looked like back in 2000. So we're going to flip over to the weekly so I can get back there real quick. And we're going to go all the way back. And here's your Amazon chart in 2000, basically 99 to 2000. You see that same sort of M top pattern. So my fear here is that Bitcoin is telling you the pattern formation, and patterns in history are amazing to predict the future, is that you may be coming into this kind of washout phase where you have to wash out a lot of the kind of the crap coins, and you kind of, the best will survive. Now, Amazon was the best, right? It was one of the best. Google, you talk about some of these other ones. And what I love to show people is that, yes, you may get a washout. And by the way, Amazon went from $112 down to $6. So if you map that out to Bitcoin, I mean, this is a worst case scenario, but Bitcoin could be headed down sub 10,000 in that scenario. Now, my target right now is 20,000 or just a little bit less, but just be aware that if it does repeat this kind of formation, then you have a lot of fear and downside to go before you wash out. But the beautiful thing about this is that if we go back, so now this is Amazon in 99, 2000, and I want to zoom out and I want to show you what it looks like if you go back, if you go to today. All right, here it is. So this is the bull case long term of why, if you're just going by charts, here is your M top pattern on Amazon back when it collapsed. Now think about if the M top, if this was a Bitcoin 20 years ago, or now, but in 20 years, where is Bitcoin trading at 3,600, $6 to 3,600? So I guess my point is that yes, I'm midterm bearish, this midterm period, let's say the next 6 months or so, give or take. But longer term, I think there's a huge space for Bitcoin to be that digital gold. And I'm insanely bullish, and I'm mocking up in the same chart as the dot-com era Amazon.
Yeah, I think that's something that could stick in people's mind, because in crypto, unfortunately, we live so much in the moment, so much on the minute to minute, hour to hour price fluctuations. It causes a lot of people a lot of stress. But when you take a step back You look at where that M pattern was 20 years ago, it's laughable. And yeah, that's what we're in right now. And so your price target is a little bit sub 20K.
Yeah, I would say my guess is we'll hit 20K, which is the 2017 high. I understand that has never happened in Bitcoin's history, but at the same time, every bear market, Bitcoin corrects 80 to 85%. So it's going to be interesting because one of those two will be wrong, right? You're either going to have a bear market where you don't go 80, 85%, or you are, and then you're going to take out the 2017 high. So in general, I'm going to start accumulating for the long term when we get around 20 to below 20. And the way I do it is I don't go all in, just like we discussed. I'll probably put 5% of my account, my longer term crypto account in Bitcoin when it gets below or right around 20. And then probably what I'll do is I'll be very regimented. I'll be very robotic. And every maybe 3,000 or 4,000 down, I'll just do another 5%. 5%, and then slowly accumulate. So if it goes to 5,000, that's fine. I'm just dollar cost averaging at that point, and I'll build that longer term position.
What will you say to people? Because this is what I see a lot of times in the comments. So for many months, we've been saying if we break 30K, which is likely, a lot of the market structure is not until 14K. So that's kind of what we've said for months. And a lot of folks will hear that and they'll say, oh, if it goes to 14, I'm going to buy so much. But as you know, you've been through a lot of market cycles. It's highly probable they will never buy at 14. Can you walk people through what's the mindset they have to have as all of the news, everyone in the space, everything you hear, even Grandma Betty is going to call you and tell you Bitcoin is dead, Bitcoin's going to zero. As you know, in market cycles, what would you say to those folks to remain level-headed at that time instead of just capitulating and giving up and running for the hills?
Yeah, and you're right. And that's just, people say that all the time. You know, I write it on Twitter and they're like, oh, if it goes to below 20, I'm going to buy everything. I'll mortgage my house. And I'm like, oh my goodness. Well, so number one, never mortgage your house to buy any investment. Number one. Number two is you're exactly right, is when there's that much fear out there, people will be too scared to buy at that level. And that's actually how you know the low is in. If you go back to 2009, and I traded, this was early on in the money stocks' history. But we went through a period where the financial institutions in the U.S. were basically looking like they were going to go out of business. Bank of America, JP Morgan, Citigroup, they were all basically at a couple dollars a share. No one wanted to buy them then. Looking back, it was the greatest thing to ever do. Mm-hmm. So you have to kind of remember these historic lessons. And you also have to think logically. Logic is try to minimize emotion. Emotion is what's going to get you in trouble. It makes you do the wrong thing at the wrong time. Put that away and then think logically. Is this still getting adopted? Are you still seeing more and more adoption in the Bitcoin and the crypto space? If you are, then continue to or start to load up or start to buy. And the best thing to do is, you don't have to take, if you have $100,000 to invest, you don't have to put 100,000 right in at 4,000 or 6,000 or 8, start small. There's nothing wrong with dipping your toe in the water. In fact, that's what I do these days is I'll dip a toe in the water at a level. If it breaks the level and I still think it's worth it, I'll put another toe in the water and you'll just accumulate. And that puts you in a great position. And the last thing I would say too, is that there's nothing wrong with taking profits on the way up too, right? So if let's say you accumulate $100,000 of Bitcoin in the sub 10,000 or sub 20,000 range, if it's up 20 or 30%, pocket a little bit of that because you don't know, maybe it'll come back down, maybe it's going to go lower, but pocket a little bit, have some assets in your pocket, and then you can always redeploy them in the right scenario. And if Bitcoin keeps going up, you're going to make money with the remaining position as well.
That's great. So one thing that this video has obviously been relatively bearish, and I know this will hurt some folks' feelings, but I also believe, and I'm sure Gareth, you as well, it's also important to look at the other side. What would have to happen for Gareth to say, hey, I'm excited about us making a new all-time high? What would have to happen in the charts for you to turn bullish?
Yeah, so number one, what I would need to see is that, just in the near term, this channel would have to get broken to the upside. So as long as we maintain this channel, this is what we would call the bear channel. If you were to start trading above this channel like here, I would start to say, okay, is the bear thesis kind of dead? And I think that's a great point, is that as a trader, you can't be all in on one angle. You always have to be ready to maneuver, because things can change on a dime. And maybe the chart right now is showing me bearish, but if it starts trading up here, then we could start to say, okay, now it's outside of that, maybe it's bullish. So that would be the start of it. And then what I'd really like to see is, it's kind of the taboo in crypto, but I would really like to see more regulation in the space. I want to see protections for investors mainly. I have friends that had, their SIM cards jacked and their Bitcoin was stolen, and they just lost their money. And there's no, institutions that makes them nervous, especially with government regulation. We need to know more specifics on regulation, what's going to come, how should crypto be treated, and then also the protections for investors. I mean, how do you tell an old lady that she should put some of her 5 million that she saved into crypto, and then you also say, oh, but if someone fools you with an email and you click this link, you could lose that. Like that, no one's going to take that risk. And so you need to see this FDIC insurance, like you have on stock trading accounts, where if you get robbed, you get that money back. So that adoption, that's super, super important to see and kind of make for the longer term case. I do think it is happening. I don't think the regulation will be bad for the crypto market, mainly because so many jobs are now relying on cryptocurrency and blockchain that the politicians are too scared that they're gonna, lose votes. So that is a positive as well. But I think all of these things can go together, between the chart and the regulation side, the good regulation, and really make me turn my angle from being midterm bearish to midterm bullish.
I love that. So really confirmation of that trading pattern.
Yep. Yeah, it's basically that trading pattern fails and you start trading above it, then it really does open the door to head back to the highs. And then obviously we'll have to reattack the highs and try to get through the 65, 69,000 level. But yeah, on a chart basis, that's the most important thing right now. Right now, again, traders it's all about probabilities, right? So as long as you're inside of this pattern, I'm not thinking with emotion here. All I'm saying is, if you look at 1,000 of these charts, 80% of them break to the downside. Okay, well then that's the angle I have to go with now. Now, if you trade above here, then that changes, and now all of a sudden the odds start to shift. That you see this kind of this shifting move back and forth, and that's what we go with as a trader, and that's all we can do. Keep that emotion out of it. Use these as trading vehicles and go with the charts.
We appreciate you, Gareth. Is there any other chart that you trade? Is it just Bitcoin, or do you trade Ethereum?
Yeah, so I do trade Ethereum. I trade, in fact, when I picked up the Bitcoin, I also picked up just 1.5% of my account in Solana. Solana, I'm still in. I'm in from just above $100, so I'm up about $5-6 on it right now. But I'm looking for a move here, and I'll show you guys. Just to show you as a trader what I'm looking for is I'm just looking for resistance. So right in this range, between 110 and 112, that's all I'm really looking for. So it's a nice 10%, 12% gain. I'm not looking to break the bank, but again, that's all I'm looking for there. There was also a trade that I did in Avalanche where if I punch up that chart on this, it was right off this beautiful trend line. I mean, just as simple as that. What I ended up doing was we bought right here at the touch of the trend line. And then the beauty of this is it went up to about 82 within 2 days, and I actually took the money off the table. And that's another good lesson, and I'll keep it real short. But basically we bought Solana, Avalanche, and Bitcoin. When Avalanche bounced, and they all bounced initially, I took one off the table because, like I talked about before, always good to take some profits. And then I left the other two on the table in case there's more upside. But again, by pocketing that, it protects you in case the other ones are losers. It helps offset. And then if the other ones want to run more, you can let them run more. But yeah, absolutely, I'll trade almost any. Generally, I stick with the top 20 because I need volume. So I don't like coins that there's no liquidity in them. I need to be able to get out and get in very, very easily. So generally I'll trade the top 20, but again, some great examples here.
We'll let you go on this question, Gareth. This is what happens a lot of time with people that are getting comfortable with trading. They get some years under their belt and, they get a little bit greedy. At what point are you adding more fiat into your portfolio? And about how much? How often? Is it several times a quarter? Is it several times a year, or once a year?
Yeah, so that's a good question, and basically for me, my crypto account is approximately 10% of my stock swing trade account. Now, a lot of you guys out there that are watching this, you probably don't trade stocks. That's okay, but the way I look at it is based on volatility. So when Bitcoin, which is like the Apple of crypto, when that can swing 80%. I have to kind of be aware of that for myself and maybe not invest quite as much. And I also don't like the fact that with crypto, when I go to sleep, something could happen and I'm sleeping and I can't react. At least with the stock market, there's defined hours where I'm up and I'm watching. So you have to factor that in. Now, in terms of increasing, as my overall net worth increases, I do increase. I usually do it quarterly. So I'll up my amount in my crypto account and I'll kind of do a rebalancing quarterly for me, maybe year end in certain situations, but generally quarterly.
What would have to happen for you to have a higher, you mentioned 10% of crypto relative to the stock? Do you ever foresee years from now it being like a 70-30, like a 80-20, even like a 60-40? Any
Yeah.
scenario in your mind, maybe more regulation, maybe more people in the space, less volatility? Is there any situation where you'll make those adjustments?
Yeah, so for sure. And basically what my account is right now is it's just purely swing trading. I'm not holding Bitcoin or crypto long term. But if Bitcoin does come down and we do see that flush out like Amazon saw, then what I'll do is I'm going to allocate probably as much as 20% additional into a longer term holding account. And in that situation, that would be kind of looked at as kind of tucking it away, buying Bitcoin, whether it's 20 or 10,000, somewhere in that vicinity, Ethereum, choosing kind of a diversified portfolio of the best of breed. And I would absolutely do that. It's just at these points, I'm not comfortable enough in that long-term kind of holding thought process to be putting that type of money at risk.
I love that. Great advice, Gareth. We appreciated having you on the show. I think that there's a lot of similarities with our audience in the way that you discuss the charts with just the facts, no emotion. Let's take emotion completely out of it. Let's have rules. Let's follow these rules. Let's have position sizes. I love all of this. So we appreciate your time, Gareth. Gareth with verifiedinvestingcrypto.com. Gareth, thank you for being on a show.
Thank you, Steve. It was a true pleasure to talk to you.
Take care.